Hello, this is Mitch King with the Daily Stock Report, January 4, 2009. This is a look at NASDAQ Composite. The last few days has been an uptrend that's higher highs. All the indexes are starting to look a little more bullish, but yet we're still entering our first week of the real trading this coming week. Let's take a look here at the Dow Jones, pretty much the same pattern as the NASDAQ Composite. Let's take a look at the oil, USO, which is the ETF or U.S. oil fund. We've had a big move here. Let's start with oil itself. Just about $35 to current price of about $47 in the last 4 days, which we're looking at right here. Very conceivable to see this be the beginning of a sign for oil to start moving up, not necessarily in a straight line, but as a general direction. Stocks are following oil still, which is the inverse of what it's been for decades. So our oil stocks are doing quite well as all the long positions that we've shown on the list. Any of the short ideas are not ready to short yet, but we are looking for an entry point for housing stocks to open a short position. Here's the volatility index, the VIX, where we had a high of 81 right in here in late November. That was when we had our November 21st bottom, which has done quite well. Looking for this to rebound upward and have a slight pullback in the market for a few days. As you saw in the text report, that you have a decision in front of you whether you want to take your short-term profits and lock them in, look for a few days pullback, and hopefully buy it at a lower price. That way it reduces your risk. Here's that T2108 chart that I talked about in the text report. This 8302 is the percentage of stocks that are above the 40-day moving average, and this is the highest it's been for over 2 years, back in October of 2006. This is not necessarily a great forecasting indicator, but in conjunction with the volatility index, it is very possible to have a slight shallow pullback in the next few days. At the same time, we've got a lot of other factors that are bullish. The fact that we're in January, we're coming out of a huge low historically. We've got a stimulus package. We've got mutual funds that really need to be starting to buy in January. We have earnings coming in a couple weeks from now. We might see a little bit of the mutual funds stand on the sideline until they get a little clue of what earnings will do. Waiting for earnings is kind of a waste of time, but that's how the mutual fund managers think. That's their discipline. This is FRPT, Force Protection. It's been moving up for over a month now at a real gradual basis. I like this kind of chart on a long intermediate trade, which is real gradual and nothing extremely volatile. Again, you know that I recommend to have different looks at it. Here's a year and a half look, and we can continue to pull out, and I don't think it's too useful there. We're looking for this to continue to move up. We always like to see the stocks on the upper right corner of your screen, which is this area here when I say the upper right. We've seen several months of stocks being down here in the lower right, which means it can continue to make new lows. This is obviously the area that we want to see these stocks when we're on a long intermediate in a real gradual way. Agrium here is starting to move up a little bit higher highs. It's a good sign. We're watching this stock for possible ag chemical stocks to start moving up. This is the first one of the group that we've watched for most of a year. Here's another one of these stocks where the chart is on the upper right. Good sign. Not quite as steady as the last stock, but this is kind of in general what we're looking for. Here's Apple Computer. We had a little bit of a nice day on Friday, up 6.3%, up $5. This is likely to open up tomorrow morning and have a really shallow pullback, if any, as far as the drop and pop. My suggestion is to try to get a feel for how this stock, as well as the other one that I had in there for solar, to see how it acts and see if we can get a pattern on this for the coming week or so. So these are definitely on a bullish pattern. On a drop and pop, you want to be long on these stocks. I suggest to you, as in the text report, to start to de-emphasize this trading technique. When we're in this kind of environment, it's going to be these long swings and long intermediate trades that are going to give us the most money the intraday trades will be a little harder to recognize and won't have quite that volatility. You guys take care, and we'll talk to you tomorrow night.